With the recent public holidays, the financial markets were light on economic data, but one main event was the release of the 2015 fourth quarter US GDP, which showed an annualised increase of 1.4%, revised up from 1%, driven largely by an upward revision to consumer spending. However, 2016 first quarter growth estimates from the Atlanta Feds show that they expect GDP growth to be chopped from 1.4% to just 0.6%, and real consumer spending estimates were also revised lower. These softer forecasts, combined with low US inflation expectations and dovish comments from the Fed Chair Janet Yellen, saw the financial markets sell the US dollar lower, which has resulted in a stronger Aussie dollar and investment back into equity markets. Closer to home, housing data suggests that seasonally adjusted house prices are on course to fall by around 0.1% for the month of March. This would be consistent with the annual growth rate easing to 7% from 8.7% in 2015. Although the 8 capital cities can have quite divergent price cycles depending on local economic issues, interest rate changes remain a major influence on house price cycles. The RBA has left the cash rate at 2% since last May, yet banks have raised their mortgage rates in response to new regulatory requirements to hold more capital. This has naturally seen an easing in housing demand and house price inflation, particularly as investors adjust their sentiment away from placing savings into housing market. At this stage, the RBA is maintaining an easing bias to the cash rate because of the prospects for relatively low inflation over 2016 and global uncertainties. However, we are expecting the RBA to remain on hold at 2% when it meets this week. On the currency front, it is the commodity currencies such as the Australian dollar that continue to bask in the afterglow of Janet Yellen's recent speech and the associated repricing of Fed tightening expectations. With an overall higher Australian dollar, don't be surprised if the RBA tries to give activity and inflation a boost by attempting to talk down the Australian dollar, which tested just above 77 cents against the US dollar for the first time in over 6 months. And finally, the latest local credit growth numbers were stronger than expected, with owner-occupier housing credit solid and business credit expanding strongly. Business credit is up 6.5% year on year and is therefore matching just above trend business confidence. Until next time, that's the market update from Bendigo Bank.